This is the FFR Trading Market Minute. This is a daily candlestick chart of the SPY, the ETF for the S&P 500. Last week, I had the line here for resistance, and Monday we hit that resistance level. I did think that we would potentially exceed that resistance level, which we did on Tuesday, because the RSI had not yet gone into overbought territory. In fact, it came up to the line, but did not cross into overbought territory. And we got another move higher on Friday. Now we have run into the weekly 20 period moving average here as resistance. You see, that's the light blue line here. So I do think that we will go a bit higher because we still have, if we look back here, this little gap that was left to fill here. So I'm going to draw a line here, and you see we still have some upside there before that gap fills, and that is kind of a role reversal. So we had, this was support here, market rallied off that level, came down, broke through that support, and now as we come up back to that level, should act as resistance. The other point now is we've got a high in the RSI here. Market made a higher high on Friday, but the RSI has not made a higher high. So there's some divergence starting here that may also pinpoint a potential turning point in the market back to the downside. We'll see how it plays out. Well, there's another gap to fill back here. That will coincide with the 200 period, the daily 200 period moving average, which will act as resistance to the upside. To the downside here, again, I have our kind of final target on this series that I think at some point we will get down to and test that level, which is the highs from the prior to the crash, the COVID crash in 2020. Another big news week with the ISM manufacturing PMI on Tuesday. We've got a Fed meeting on Wednesday, and then the unemployment numbers on Friday. All potential major market movers. So should be an interesting week. Hope that's helpful. Again, you've been watching the FFR Trading Market Minute.